Let's take a look at some specific stocks and the broader market. Also, James Gerrish joining us from Shaw and Partners. He's also the author of Market Matters. James, a very good morning to you. So how are you looking at the local market at the moment? SPI futures indicating that we're going to have a strong opening this morning. It's up 1%. And we've had the past 3 days, we've had gains. Of course, this comes after that turmoil we saw last week.
Yeah, good morning to you, Andrew. As you may mention, it's going to be a positive open this morning. We're going to open up sort of 0.9 of 1%. The gains in the last couple of days have been more muted. So yesterday we were up 20 points and on Monday we were up around the same. So obviously they're being amplified by strength in the US market overnight. And I think it's, after a 9% correction on the ASX, it's not uncommon to have a bounce from the lows, particularly as some of these negative influences on the market, if you like, in terms of bond yields, etc., stabilise somewhat. So a positive open, and I think the market to me is setting up for a continued bounce in the short term at least. So weeks to a month of positivity coming back into the fore.
So are you expecting investors trying to do some bottom feeding at the moment? Of course, it's always dangerous to try and pick a bottom, but nonetheless, perhaps some opportunities there.
Yeah, exactly right. Well, it depends on what sectors you're looking at as well, Andrew. So obviously the resources sector has been has been under pressure in the last little while. We all know that technology has been hit very hard over the last 6 to 12 months or so. So in the short term, I think resources are probably primed for for a bounce. I think technology, given what we're seeing playing out in bond markets, the stabilisation there, I think technology is primed for a bounce, while we might see some movement out of the defensive areas that have been holding up pretty well. So some sector rotation. Sector rotation's been a very dominant theme over the last 6 to 12 months or so, particularly on the Australian market, Andrew.
Just specifically looking at a couple of stocks, you just mentioned there's some news in regards to Qantas, the ACCC. Begun a informal review just as far as its proposed takeover of Alliance. Does that raise any alarm bells for you?
Well, I wouldn't think so. I mean, obviously the ACCC is doing their job and they need to be looking at deals like this. Qantas was obviously a major shareholder in Alliance. They've now taken or made moves to take over the full company, which I think is which is a good move from Qantas. The ACCC looking at it, I don't think is anything to be alarmed about or anything that wouldn't have been expected in that circumstance. I think Qantas more broadly, we own the stock, have done for probably 6 months or so. I think the operational metrics in Qantas over the coming couple of years are going to be really strong. They've made, they've not benefited from the pandemic, but they've done the right thing in terms of their business operationally. They've reset the cost base, and going forward as earnings ramp up and recover from the pandemic-driven losses that they've been seeing, which they'll see in FY22, but FY23 and beyond, these guys are going to be more profitable in my mind than they ever have been. So that's why we own that stock in our growth-orientated portfolios.
All right. Also keeping an eye on Bluescope Steel, lifting its second half EBIT guidance there to 1.3 to 1.4 billion. Yeah,
great update from Bluescope this morning. They're talking about their overseas operations being the reason for this upgrade. But if you look at it, I mean, they were guiding previously to 1.2 billion, between 1.2 and 1.35 billion. They're now at the midpoint. They're going to do something like 1.43 billion. So it's a meaningful upgrade in terms of the EBIT line for Bluescope. They're also seeing a lot of, they're also making moves to increase their domestic production manufacturing capacity within Australia. And I think that's going to be a theme that we're seeing in a number of local manufacturers based on supply chain issues and what's played out during the pandemic. So to me, Bluescope's been under a little bit of pressure in the last 6 months or so. This should be the catalyst to turn that ship around in the short term, and Bluescope actually looks quite interesting down here at current levels.
James, any other stocks on your radar at the moment that are trading at a discount that you're thinking is not a bad opportunity?
Yeah, a couple of things we wrote about this morning in our Market Matters reports. We flagged Independence Group. So they've traded, they're down 33% from their recent highs. They're nickel and lithium, of course, they're going out there. They've acquired Western Areas in a deal, I think, which stacks up. They certainly didn't overpay for Western Areas given the backdrop in the nickel market at the moment. And this is a battery metals business that's doing really good things. So that 30-odd% drop in share price, I think, presents an opportunity. Lynas Rare Earths is one of the most recent stocks we've added to our emerging companies portfolio. They've started to, they pulled back sort of 20-30% as well from their highs, and we added it to that portfolio. So they've had a reasonable last seven trading sessions. So in that area of the market, I think, to me, technology is still I think it'll bounce in the short term, but I don't think it's the place you want to be overweight in portfolios. So if I'm, in our technology holdings, we'll be more sellers of strength rather than buyers of weakness here. But resources, I think, in the very short term are where some good opportunities for the shorter term traders are looking out there.
Yeah, James, those battery metal stocks have certainly run really hard the last few months. Come off quite considerably just in the last couple of weeks, though. You mentioned IGO, Lynas there. Are you purely looking at producers, or are you taking any look at some of the explorers at the moment?
Yeah, mainly those that are producing, Andrew. But I think it's to your point around how much they rallied and now they've come off from their peak. It speaks to investor positioning. So the market was extremely bullish on the resources trade 2 months ago, and since then we've seen a pretty decent re-rate in a number of these names. So I look at Oz Minerals in the copper space has come off 27% from its highs. The BHP's come down from sort of that $55 to be trading around $46. So there's been some, that positioning, investor positioning is really key. So when everyone is bullish a sector and everyone's talking it up as they were in commodities, and it can only theoretically go one way, it often goes the opposite. The crowd is often wrong, and I think that's been played out. We've seen some weak longs washed out in some of these, the lithium, the battery metals stocks, and that's why we've seen a pretty sharp correction. Now, though, I think some of that heat has been taken out of them, and I think that the medium term dynamic supporting commodities is still there, and some of this hot money has been taken out. So that's what we like to wait and see. We like to buy things with, when the risk reward stacks up, and I think probably now after this recent correction, the risk reward to go back in the commodities actually stacks up pretty well.